Welcome back to the channel, friends. Today we're discussing something extremely important for anyone who invests in the stock market, whether you're a beginner or someone who has been investing for months. The most common mistakes beginner investors make, why they make these mistakes, and how you can avoid them to actually build long-term wealth. If you want to grow your money safely, avoid costly errors, invest like smart, successful investors, and make your portfolio stable and profitable, then this 10-minute video will save you years of confusion. Let's begin. Mistake 1. Chasing quick returns. Most beginners enter the stock market with unrealistic expectations. They think, if I buy this stock today, it should double next month. Or they look at some multi-bagger chart and think, if I just find the next one, I will become rich. This mindset is extremely dangerous. Why beginners chase quick returns? Social media hype. Influencers showing 100% gains. Friends bragging about profits. Desire to get rich fast. Fear of falling behind. But the reality is, quick money is with high risk. High risk means high chance of big loss. And big loss takes years of recovery. Real example. People bought small cap stocks based on hype, hoping they would double. What happened instead? They fell 40%, 60%, and sometimes even 80%. If you want long-term wealth, you need to focus on stability, consistent compounding, fundamentals, and patience. Big money grows slowly, then suddenly. Mistake 2. Buying without research. This is the most common mistake. Beginners buy stocks based on WhatsApp groups, Telegram tips, YouTube hype, friends or relatives, random recommendations, one news article. This is like picking a partner for marriage after seeing just one photo. You don't know what the company does, how much debt it has, whether the company makes profit, whether the management is trustworthy, whether it has a competitive advantage. Real example. Many beginners bought Yes Bank at 250 rupees, then at 180 rupees, then at 120 rupees. Why? Because social media made it look like a cheap recovery story. But basic research would have shown high NPAs, bad loans, weak management, declining fundamentals, red flags everywhere. Research protects you from disasters. Mistake 3. No diversification. Putting all your money in one stock is the fastest way to create stress. If the stock falls 20%, your entire portfolio collapses. Diversification is not about reducing risk. It is about survival. What beginners do? They buy one favorite banking stock, two risky mid-caps and one penny stock, and put half of their money in one sector. If that sector faces trouble, your portfolio crashes. What smart investors do? They diversify across sectors such as IT, pharma, banks, FMCG, auto, market caps, industries, geographies. Diversification is like wearing a seat belt. You may not need it every day, but it can save your life. Mistake 4. Panic selling during market crashes. This is the biggest wealth-destroying habit. When the market drops sharply, beginners panic and sell everything. They think, the market will crash more. Let me exit now and buy again later. But nobody can perfectly time the bottom. Real truth is big investors buy during crashes. Only beginners sell. When you panic sell during a correction, you lose two things: the stock, the opportunity to recover. Real examples. 2020 crash. Markets fell 40%. People sold everything. Within 1 year, markets made new lifetime highs. Every correction becomes a buying opportunity for professionals. Beginners sell because they look at short-term movements. Professionals hold because they look at long-term value. Mistake 5. Trying to time the market. Many beginners think, I will buy when market is cheapest. I will sell when it is at the top. Even experts cannot predict perfect bottoms or tops. Trying to time the market leads to fear, confusion, delay, missed opportunities, paralysis by analysis. A better approach is regular investing, SIP, buying during dips, staggered entries. The best investors don't time the market, they stay in the market. Mistake 6. Holding too many stocks. Beginners buy every stock someone recommends. They end up with 30, 40, even 60 stocks. This is not diversification. This is diversified confusion. You cannot track results, earnings, news, fundamentals. Your portfolio becomes a mess. Smart investors maintain a focused list. 10 to 15 quality stocks. Strong fundamentals. Clean management. Long-term stability. Fewer stocks gives the better returns. Mistake 7. No clear investment goal. Ask a beginner, why did you buy this stock? Most answers are vague. For long term, to make money. It will go up someday. Someone told me. But serious investors buy stocks with purpose. Wealth building, retirement, children's education, long-term growth, regular dividends, stability. Your investment decisions must match your goals. If your goal is 20 years, why panic for 20 days of correction? Mistake 8. Ignoring fundamentals. Beginners look at price, past return, chart pattern, but seeing these won't help for the future price. While long-term investors look at revenue growth, profit margins, return on equity, return on capital employed, debt level, promoter holding, competitive advantage. Price tells you what the stock is doing today. Fundamentals tell you what the company will do tomorrow. Mistake 9. Not reviewing portfolio regularly. Even good companies can become bad over time. If you don't review earnings, debt, management changes, sector performance, your portfolio may have dead stocks. Smart investors review quarterly results, annual reports, corporate announcements, profit growth. A portfolio is like a garden. Regular maintenance keeps it healthy. So friends, these are the biggest mistakes beginners make when investing. Chasing quick money. No research. No diversification. Panic selling. Trying to time the market. Too many stocks. No clear goal. Ignoring fundamentals. No portfolio review. If you fix these mistakes, your long-term wealth will grow automatically. If you want, I can also create top 10 stocks for long-term. Best SIP stocks. Beginner-friendly portfolios. High-conviction stocks for 2025. Just comment portfolio guide video and I will make it. My next video will be on how option chain works, so be excited. If you like the analysis and gained knowledge from this video, do like, subscribe and share the video to your friends so they'll also get benefit out of this. I'll see you in the next video.